What's up? It's Rowan here from Artist Mind Education with the weekly HSC Economics Stats Update episode. Now, in this episode, we're going to be unpacking Stage 3 tax cuts, their emerging impact on consumer confidence and economic growth. We're also going to be looking at the Australian dollar tumbling as a result of low Chinese economic growth and what that means for both the Australian economy and future budgets. Now, if it's your first time dialing in these episodes, I unpack and summarise the main headlines from around the domestic and global economy, giving you the key stats and analysis that you need to ace the HSC Economics course and level up your essay analysis to score those band 6s. So let's jump in and look at the headlines from today. So the first big headline we want to look at is the fact that consumer confidence has just risen 5.9 percentage points to a 6-month high of 84.4%. Now, this is according to ANZ Roy Morgan data. Now, why is this the case? It's argued this is a result of Stage 3 tax cuts that are starting to flow through into pay packets. Now, why is consumer confidence important and relevant in your analysis? At the end of the day, 60% of aggregate demand in Australia is driven by consumption. And consumer confidence is the barometer of what likely consumption may look like in the economy. If confidence is high, consumption is likely to increase in the future. If confidence is low, it's likely to go the other way. So a little uptick in consumer confidence is a real positive given that it may indicate increases in future consumption. Now, why is that important? Well, ultimately, at the moment, Australia is in a per capita recession. We're not in an economic recession, but of course, economic growth isn't strong, right? There are real concerns about whether or not the RBA is going to be able to navigate that tightrope of ensuring that we get inflation under control, unemployment not too high, and continue to maintain positive economic growth. And so this is a real positive that we can take, particularly around analysing the impact of the recent fiscal Stage 3 tax cuts in suggesting that they're really supporting, in that macroeconomic policy mix, the economy and economic growth stay strong, while the RBA needs to do what it needs to do to control inflation. Now, note, it's important to highlight, that ultimately, right, while confidence at a 6-month high, it's still very, very fragile and it's well below the average since 1990. So there's a little uptick, which may get snuffed out by, inflation data coming out next week. But ultimately, it's still very, very, low. It's still below the long-term average. So great little positive here, but there are still some things we need to be aware of. Now, the great thing is that you can access this data directly from Roy Morgan. They produce this weekly. You can download a PDF. Of this report, and you can get the data. In terms of a little bit more commentary around what's going on with consumer confidence. So this is a great resource to come to when you're trying to build out analysis for different time periods. On the effectiveness of policy. What's even better is they provide a table. From 1973 to 2024, every single month and a yearly average of what the consumer confidence ratings were. This is great because if you're looking at, COVID period or secular stagnation or mining boom 2, and you want to look at confidence in relation to fiscal or monetary policy around that time, you can pull confidence ratings from here and then utilize that to highlight the impact, that certain policies might have had on consumer confidence and therefore on consumption in the economy. Now note, this is not the only source of consumer sentiment index information that you can access. So Westpac also provide a consumer sentiment index. These are monthly reports rather than the Roy Morgan's weekly, and they don't come out as frequently as a result, so the most recent one as of today is from May, but if we go and look at this, what this will also provide you with is their sentiment index and an explanation of what's going on. So as you can see, it dipped in May, very little. It's been sort of sitting around the low 80s, as we can see here for some time, really it's been sort of sitting in those low 80s, really since, looking at it, 2022. And they're going to give you explanations as to why. So ongoing cost of living and inflation concerns, right? As inflation is no longer sort of deflating, really the end of deflation was December, right? We've seen very sticky inflation, and so that has been driving low consumer confidence, because ultimately inflation is one of the big factors that can create uncertainty for the future and for future prices and economic certainty, and therefore influence confidence that consumers have to go out and spend money. So just another source that you can access if you're trying to look for some really fantastic data around consumer sentiment and some analysis to integrate into your essays. Now, what else is going on? Well, the RBA is obviously trying to navigate a real tightrope with recession, avoiding the recession and getting inflation under control. Now, the thing here that I particularly wanted to highlight is that a recent Deloitte Access Economics report has argued the economy would already be on the way to a recession in the next 12 months if it was not as a result of the stage 3 tax cuts. And so this is again a real positive, I think, bit of analysis you can use in evaluating the recent budget's impact on the Australian economy to highlight that without those stage 3 tax cuts in the government budget, not only would we be seeing ongoing, even lower consumer confidence, but actually, the overall economic growth in the economy would be even lower, really resulting in recession. So you can really argue here that as part of that macro policy mix, there's increasing evidence that the fiscal policy component is really doing some really needed lifting to maintain economic growth while monetary policy deals with those other issues. Now, the final headline from today is that the Australian dollar tumbles on fears of Chinese economic slowdown. So the reality is that the Chinese economy has slowed. Okay, last week the data came out that showed that it grew 4.7% from April to June. It was below the expectations of 5.1%. So the economy has been slowing. Okay, now that has implications for Australia, particularly because what that has meant has been slowing demand for iron ore, which is one of Australia's key commodity exports. Okay, now they're obviously one of our largest trading partners, China. Now their reduced housing construction, due to a housing market collapse there, okay, is resulting in less steel being produced and therefore less iron ore being demanded, okay? And you can see that the price of iron ore has really collapsed, okay? I mean, even over the course of this year, okay, it was at a high in early January of $144, and it is now, at 106. Now, this also compares, and this is in USD, to a price of well over $200 in USD during the pandemic. So we can see over the period of the last couple of years, we've seen a price go, pretty much halve from over 200 to 106. Now, a lot of this is off the back of falling Chinese demand, okay? Now, the reality is for Australia, this is a key export. It drives export revenue. A lot of our economic growth over recent quarters has been continued to be supported by export revenue. Okay, and so the fact that we're seeing one of our major trading partners start to see their economic growth go backwards indicates we may see a drawback in our own, trade balance certainly, but certainly the role in which exports are playing in supporting economic growth. Now, the other reason this is relevant is the budget uses forecasts around iron ore prices and expected revenue, okay, that's going to come through from trade, and they utilize that to define, their revenue and their expectations around revenue, and then to therefore define what the budget outcomes can mean. And so if they've got these assumptions wrong, and for example, Chinese growth slows even more than expected, it could push the budget into a larger deficit position as well, making it more expansionary. So it can have some consequences at a policy level as well. So there we have it, main headlines from around the domestic and global economy. I'll see you next week.